Ligher is one of the fastest growing decentralized perpetual exchanges, taking over crypto by storm. Today, I sit down with Vlad, the founder of Ligher, to unpack all the secret sauce. We will discuss why Perp DEXs are finally being adopted by crypto traders and how Ligher stands out among the competition. Watch till the end as we also drop some alpha on the Ligher points program, which everyone can still participate in before Season 2 ends by the end of this year. Hello, Vlad. Great to have you here on the show today. So let's get right into it. Before we dive into the product, I did want to ask about your personal story and what brought about the idea of Ligher. So what's your background before you founded Ligher, and is there a specific moment of frustration or some reason that really prompted you to build the product that is Ligher today?
Great. Thanks for having me, Virtualbacon. Let's jump into it. Yeah, so I guess I'm not like a crypto guy who started thinking about finance. I'm more like a finance guy who took a detour into fintech and AI and then got into crypto kind of a bit later, at least as a builder. I mean, I have followed the space for quite a while. To zoom into that a little bit, I started my career at Citadel, kind of in the early days of HFT, and then continued that at another firm. We're kind of build out the HFT desk, and then around 2012 came out to Silicon Valley and worked on a few startups around fintech and AI first as an executive and then as a founder. I guess when we started building Ligher in a little over 3 years ago, actually, kind of like mid to late 2022, and I would say it was less around a personal pain point and more just like zooming out and really thinking about like what are we really doing here, right? Like with digital assets, like we have all these digital assets that most of them represent some kind of decentralized protocol or blockchain technology, but at least at that time, like 99% of the activity of how they're traded were actually on centralized venues. So it's like it doesn't really make sense. Like you're not like all the stuff that these protocols are building as far as decentralized rails, you're actually not using that to trade them, that didn't really seem to make a whole lot of sense, and didn't seem to be like, if that's kind of where the industry's headed, then it seemed like we kind of missed a big opportunity for what this whole industry is about in the first place. So it was more driven from that macro picture as opposed to like, I was a trader, like I said, on the TradFi side. I mean, I still do some trading here and there, but I'm not like, this wasn't something where I was like running a trading shop and was like, oh yeah, like I need this like particular problem fixed. It was more just like a macro view of the industry.
That makes sense. At least in my trading experience on chain, like I love to do self custody. I've been using the same ledger, although I've upgraded multiple times, but since 2017, it still hasn't broken on me. The same,
right.
Self custody, same seed phrase, everything. And that's what I really like. One of the core parts of crypto. I've even moved countries multiple times. Like it never breaks. Having that, even the trading experience, not just the hodling experience, still be self-custodial is what I found to be most exciting. And so, what other like user experiences have people brought to your team that really prompted them to use a perp DEX? And why is it all the rage today versus just using centralized exchanges?
Right. Well, I think as far as why there's so much attention, in the last few months specifically, I mean, I think that's a bit kind of just a bunch of factors all happening at the same time. Like I don't think the products, like I think our product has certainly evolved a lot and we've improved the user experience like since we launched, and other products have made incremental improvements. Like I don't think there's been like a breakthrough on the product side recently. I mean, I think it's just like, it's been like steadily improving, and now all of a sudden, like maybe there like a certain point has been reached where there's not really a reason to use centralized exchanges anymore in terms of like if you're looking for low latency or looking for low cost. In the case of Ligher, you can actually get both, but like depending on what you're looking for, you can get most or all of it from one of the decentralized projects, and hopefully a lot of customers will pick us. But the point is like, I don't think there's any like one breakthrough moment that happened in the last 2-3 months. It's maybe just a combination of things and like incremental improvements. I can tell you one thing: when we started building in 2022, back then, like the lead was DYDX V3, right? And they had 1% of the volume of the centralized exchanges, which was like, a great start for them. I mean, I think they laid a lot of good groundwork, but that was tiny compared to like the whole space. And that that product, again, was a great early start. I mean, it wasn't, it was still pretty like hard, I think, for most people to use, and it's pretty costly. And that was the best that existed then. The others were like much far behind that. A lot has changed in the last 3 years, but why there's so much attention like in the last quarter, I think that's just like a combination of, maybe a bunch of things compounding, and then a lot of like attention by certain voices with a lot of followers and stuff like that.
Yeah, I could feel that. So like I'm a big self-custody guy, and I'm pretty sure the first perp DEX I've used was DYDX. I don't think I've used them since they migrated off Cosmos. It just felt kind of, in comparison, like some of the deposit withdrawal was a little clunky, and the liquidity was fine, but it didn't feel as slick as today. Maybe because there's like too big of a cross-chain and sign up process. Whereas today, I literally just sign up with Rabby and it's there.
Right.
And then since then, like GMX was like okay, but for what they did, it worked for like Bitcoin ETH, but they really couldn't do too much for alts. So I think it's a really great state today. I trade on Ligher, I trade on Hype, or I trade on Binance. It honestly feels the same. Unless I trade like multiple 7 figures on an alt, there's pretty much no difference, and that's really cool.
Right. That's a good problem to have, I guess, right? If your capital is too much to trade in and out.
Yeah. I do want to get into some of the unique features. So there is one question that I've honestly not been able to figure out too much. So what is this verifiable matching and secure liquidations with ZK? This is one of the biggest selling points of Ligher. So can you explain briefly, like in simple terms, what this means for the regular trader?
Right. Yeah. So you mentioned earlier, like self-custody, right, as a thing you care a lot about. I think if you look at like the hierarchy of needs of like what do you want from an exchange, right? Like the first thing you need is that, like your money isn't going to be stolen, or not just, in a good case, but like it can't be stolen, right? So that's like the first thing you want. So I think self-custody gets you that, right? The second thing you want is that, the trades you think you did are the trades that actually happen. And I think that's important too, right? Because it's like if you send, like maybe your assets are there, but like you send a buy and it says, it was filled, but actually it wasn't. Like you don't want stuff like that to happen. And I think that most products have that now as well in a decentralized, like verifiable way of some kind. But the third thing you want is that you want the matching to be verifiable. And what does that mean, right? Because because I think you can ask the question, what does it mean if matching isn't verifiable? Well, that means you're just sending orders to a black box. Like maybe I send an order to buy at 1,000, you send an order to buy at 1,000. My order gets filled, yours doesn't, even though you send it first. Like, and then you wouldn't even know that that's happening, right? Like, you might be systematically like cheated in some way, or like there might be some unfairness going on in the matching engine. And if it's a black box, not only can it hurt traders, but traders wouldn't even know that it's happening. And so the whole point of verifiable matching, right, is that we process like 300 million orders a day or something like that now, right? And like a couple percent of them get filled, the other ones get canceled. Every single order, the state of what happened to the order, there's a proof of that. Like it gets sent, it gets into the order book, this price time priority, it gets matched or doesn't get matched, it gets canceled. Like the fact that every single one was processed fairly, there's a proof of that. Now, we're not the only ones who do that. Like Hyperliquid also has a version of this, which is done through running their own L1 and reaching consensus. The hard part about what we've built is to be able to do this while still being on top of Ethereum. Because if you try to do this by just like writing smart contract code on Ethereum or even on one of the L2s, like it would be like super slow and super expensive. So like the hard part of Ligher technically is like being able to do this verifiable matching while still inheriting Ethereum security.
Okay, if I'm understanding this correctly, the difference between other perp DEXs that might do this is this verifiable order matching is built into the sequencing of your application specific like DEX L2.
Right, Ethereum. Yeah, and again, the like Hyperliquid also has this, but they're doing it as an L1. Some of the other products that are on top of Ethereum have security layer that's not their own L1. They don't actually do this part, right? Like the matching is just done off chain. It's like the matching part is like trust me, bro, right?
Yeah,
it's very important, right? Especially during big market moves. Like if you place an order, you don't get matched, and somebody else does. Like it's very easy for retail to get screwed over. I mean, that's what happened during, like, I think in Windows TradFi, like the flash crash, or even stuff that happened, the crypto flash crash, like October 10th, like this kind of stuff. For us, like every single thing that happens in the exchange, there's a proof that it happened fairly.
So, for example, on the 1010 crash, if I want to figure out, okay, was my order fairly executed according to the rules, there will be a ZK proof on ETH-L1.
That's correct. Because you can ask, well, most traders wouldn't know if the proof is right or not. But it's like, even if one person finds a mistake, then we lose all credibility, right? So it's like Bitcoin, right? Like most Bitcoin users be able to confirm that like Bitcoin worked correctly, like not necessarily, but as long as one person, the fact that no one's found a problem with it in 15 years means like it probably works correctly, right? And because it's all public.
That's cool. And the fact that it's on ETH-L1 makes it practically forever, as long as this this whole on-chain thing is a thing.
That's right.
That's cool. This is actually way more practical of a use than like people tracking, these on-chain orders and trying to trade them, trying to follow them. This is actually ensuring that the orders are being filled correctly and in the fair way. So
so ZK, like there's this, like, I guess the technical term for these, it's like ZK snarks. Like those are the circuits that kind of encapsulate the rules the system has to follow. But like what ZK snarks give you the privacy part, that you can use them for that, and there's also the synchronous part, right? So the way we use them is the second part, which means that like if like a million orders all got processed in a few minutes, there's like a proof of all of that, and that proof is short. Like the point is that you don't have to post all of that data directly on Ethereum. You just post a proof of that kind of, combines all of that information. And so that's what's called like synchronous. I mean, that's where Succinct Labs gets its name from too, right? But like, because sometimes people mistake, it's like, oh, ZK, that must mean you're doing like a dark pool, which ZK could be used for that. And maybe we will in future versions. But the thing we use it for right now is to like prove all this stuff with very little overhead on the L1 on Ethereum.
That's cool. I think this is, at least for now, very practical way to do it. I'm not so sure about the privacy stuff, because like you might as well just go for a centralized exchange if that's what you're looking for. But if you're trading on chain, and especially for,
I mean, right. Sorry, not to interrupt, but I mean, I don't think you should have to make the trade-off of like privacy versus safety, though. What we've seen is just not something customers care that much about. Like most traders are fine with kind of everything happening in the open, as long as no one has an unfair advantage. I think it's, from our experience, most traders are okay with that. And I think Jeff from Hyperliquid has written an essay arguing a similar point.
Yeah, for the most part, I mean, it should be, as long as it's fair. You can do other things if you want to make your wallet less exposed to scrutiny, but I don't think that's on the exchange to force everyone to be private. Technically, you always have a choice, since it's full self-custody. So I don't see it. That's a way easier route if you want to go than like, okay, the exchange have to make sure all my orders are private. I mean, yeah, I'm not sure that's that useful at the exchange level.
Right. I mean, for us, it's like if there's customer demand, like we can easily build in dark pools as like not as the main thing, but as like a separate, like maybe you can trade, BTC perps, in the current pool, or you can also trade them in the dark pool, right? Like we could build that. It's just a question is there enough customer demand for it relative to other things that customers want, like maybe they want universal cross margin or options.
Okay, I did want to touch upon the October 10th crash, and I was trading on Ligher that day. I think I had a long on Aster, and I did get liquidated, but I checked the books. It was totally fine. It was like very fair, and you guys did a whole like compensation plan for your degraded performance and such. So can you walk through maybe how Ligher handled this this market event?
Right.
Honestly, like the biggest crash over the last 4 years, and was auto deleveraging in this case a good tool, and how did small traders' positions get affected?
Right. Yep. Right. I guess, a lot to unpack there. I mean, I guess for us, the way we view the events of October 10th are like they're like kind of three phases of what happened from where we said. One is like, even before the flash crash, there was like kind of markets were starting to get pretty crazy with like just a lot of orders, a lot of like high TPS. Like it was like our system worked, but performance was a bit degraded during that time. Then there was the actual flash crash that lasted like a couple hours. During that time, actually, our system worked well, like, or at least as intended. I mean, obviously, it didn't work. Not every trader made money, but like it worked as intended. And I think actually a lot of people's portfolios were saved by the liquidation logic. And I can go into that in a second, right? But then the third phase was actually after the flash crash, like 5 hours later, we did have an outage, and like the outage was not during the really volatile time, right? It was kind of after things had already calmed down. It's the only outage we've had in the 9 months since we launched, first private beta and then public mainnet. Of course, any outage is a problem, and we take full responsibility. And so people who were affected by that were compensated. But again, just to be clear, like that was not during the actual flash crash. And but I mean, the two events are related, right? I mean, the reason the outage happened is because so much data was going into the database that eventually the database gave out. The irony of it, we actually were planning to upgrade the database that weekend already, but it didn't. We kind of missed it by a day, because it was Friday night. But anyway, but going back to I think the main thing you're getting at is the liquidation logic. So our logic from the beginning was implemented in a way that kind of favors the trader a bit more and the liquidity provider a bit less in terms of the liquidations and the auto deleveraging. The liquidation fees in general are actually higher, at least they have been historically. And so there's that trade-off too, which should be acknowledged. But so it's like if you're liquidated, if the market's moves are pretty big, you get liquidated. Maybe you're paying a bit more in liquidation fees, but what you get in return is that when there's a really big move, it handles your liquidation, charitably. And auto deleveraging does kick in. You need to have that, right? If you don't have that, like let's say BTC went down to like 60K, like you can't just like say, well, there's just not enough money in the system, because you can't like claw back, right? It's not like TradFi where you can like send a lawyer after somebody to like claw back money. So it's like if the system has less money in it than what everyone thinks they have, like you need to do the auto deleveraging. It's just a question of when and how. And our policy was from the beginning kind of more liberal on that, and I think that worked well for a lot of traders.
Yeah, that's what I found after mainnet, especially. So I've been trading on Ligher since about June-ish in the private beta, and before there was auto deleveraging, but it was much like, this is just how I felt. Like the range that my position would get deleveraged would be pretty close to the liquidation price shown. It's like pretty tight, and I still feel like within 10 minutes, if it's gone, it's gone.
Right.
But now it's very slow, very spread out. It seems like it's like, oh, I'm getting pretty close, but then it'll actually push quite a much further past, and slowly trying to keep a lot of my positions still intact.
Right. So we haven't changed the policy. Yeah, I guess what has changed is just like there's just more liquidity, like more market makers. So I think the kind of the liquidation engine trying to like do it partially or trying to like work your order, if it takes over the order, like I think those rules didn't change. It's just that the liquidity has changed. Like a lot of, like I think in June, probably 90% of the liquidity was just the LLP, kind of the internal market maker that everyone in the community can buy into. Like now, I think LLP is like maybe 30-40% of liquidity. And those other market makers are like, I think, doing a good job.
Yeah, definitely. It feels a lot smoother now. Like it used to be just, I would be a little bit scared to trade like some of the super new listings, but now it's totally fine. Like I know it's the auto deleveraging will work, and at the liquidation price, it will still push quite a bit further than that. And it used to be, I wasn't sure about that. Like, it's up to kind of each market would have been different, but now I'm pretty comfortable with each book. Right.
Yep. That's great to hear.
Okay, let's bring it back to a little bit of the retail trader questions that I saw people ask before. So for people who haven't used Perp DEXs, or maybe they've used they've tried Hyperliquid or they tried DEX way back. Like, how does this compare with centralized exchanges at the the highest, most important question, like the self-custody part, the deposit withdrawals, when people use Ligher or use any other Perp DEX, like how does that process work with deposit withdrawals, and how do they have full guarantee of their funds?
Well, the guarantee is actually like that's actually something you don't get on a centralized exchange, right? I mean, you can like if they're maybe if they're like registered in some jurisdiction, they have to provide proof of reserves or something like that. But like you actually don't really get that. Whereas on a perp dex, like you can see at least speaking about Ligher, like there's a smart contract, like you can see and if our TVL was 1.1 billion, like you can look at the smart contract where that collateral sits, and you can see like every single deposit, every single withdrawal out of that, and the governance, like the protocol was went rogue or whatever, like we couldn't take those funds even if we wanted to, right? So it's like, so you can that's you can see the smart contract that governs it and all that. So I think now the deposits and withdrawals, Ligher is on top of Ethereum, so the native deposit and withdrawal function is through Ethereum. So if you have money, your wallet that's already on Ethereum, you can just move it into Ligher, take it out of Ligher in a native way that's kind of maybe the most secure way. And also, by the way, we have a guarantee that if hypothetically like our exchange or RL, along with it, like RL2 went down and we couldn't recover, or the proofs were wrong, you can eventually just take your money out from Ethereum. It doesn't exist. Like if something that runs on its own L1, if that goes down, like there's not really any recourse, right? But like for us, we have this so-called escape catch. But yeah, so there's a deposit and the withdrawal. One thing is that to make traders' lives easier, like most traders who are active traders and not just like long-term hodlers, as you said, like they keep their money on other wallets too, like Arbitrum, just because it's cheaper to move it around. So we've added bridges like out of Arbitrum, out of Solana, actually even out of like Hyper EVM, so to deposit. So those you can use those bridges instead of the Ethereum one to deposit, and they work kind of the same way that bridges normally work, where there's for example like Circle for USDC, there's something called like Circle CCTP, right, which moves the funds over on the Circle side, and then after like a minute or two, it gets published on Ethereum. And then we have the withdrawal as well. Right now, it's only for Arbitrum, like the fast withdrawal. So that one also, it's like, yeah, you get your money in Arbitrum, and then the funds get taken out of Ligher, and like they get bridged to Ethereum and then to Arbitrum on the back end. But you don't have to wait for that. You just get your funds on Arbitrum, and kind of the system does the rest on its own in the back end. So that's the bridging part. But going back to your point about self-custody, right? Like I think this is not a very deep point, but like these days you don't really even need, I mean, if you're a trader who's used to just logging in with your email, there are solutions now. The one we work with is called Dynamic. There's another one called Privy, right? Actually, Privy was acquired by Stripe. Dynamic just today was announced it's acquired by Fireblocks, I believe. So anyway, but I mean, these will both continue to work. At least we know for sure Dynamic is like, but the point is that like but these solutions, you can actually it's like embedded wallets, right? You can log in with your email if you want. You don't, like, if you're somebody who is coming from a Binance or another centralized exchange, like, and you like that experience where you log in with your email, you don't have to worry about like storing your keys. You can do that. You can log in to Ligher that way, and I mean, I think many of our competitors have that too. So that's not really even like, is that like, if that's the reason people were felt friction to use a DEX, like that's not really friction anymore. I mean, I think just like if I try to argue the other side, like why would you use a centralized exchange right now? I mean, for one thing, there's just like more other stuff in it, like not just like those are like some of those exchanges are like super apps, right? They're not just for trading. You can do like stuff like, I don't know, like P2P, or like maybe there's like other little like games or giveaways. I don't know. There's just so much stuff in those apps. So that's one thing, right? Or just like, yeah, like if you're a really big trader, some of those centralized exchanges do still have more liquidity right now. I mean, I think that's changing quickly, but yeah, like if you're a really big trader, but that doesn't apply to that many people. But yeah, like if you're moving around very large positions, like that could be another reason. But and I guess third reason is like their mobile apps are pretty good, right? Like we're working on one right now for Ligher, and we hope to have a good one. But like historically, perp dexes didn't have mobile apps or didn't have very good ones. So I would say if I try to argue the other way, it's like those three things are why like people still use centralized exchanges.
Yeah, I think the custody thing is quickly changing. Like, as it's little bit of a education curve where people have to realize, hey, like the security here is natively built into the protocol, and if you trust any layer 2, it's the exact same tech as when you do deposit withdrawals, when you do the proofs that your funds are on the smart contract on ETH, and then thus it's on this side on Ladder. So and that's like, compared with most exchanges, that's way more sound of even battle tested. You can't just build an exchange in like 1-2 years and have everyone be comfortable with how you hold your deposits on the centralized exchange. That it takes like 5-6 years, like 2 cycles, right? You can actually do that with code and do that with the layer 2 architecture pretty easily. And the onboarding flow, definitely, I use so many wallets that are privy based. It's way more on me to keep my computer safe and the seed phrase properly stored and not keep too much money on there, versus like, hey, I don't trust this thing, or the login is difficult. That's no longer a thing.
Right.
So yeah, we have come a long way.
Like, I think the Hyperliquid team deserves a lot of credit for kind of making strides in this like UI UX area in particular, right? Because I think, and we started building actually before, for us, like the core tech of the the verifiability and the security, and we took a lot of time to build that, right? But just a lot of these like UI UX innovations, Hyperliquid should get the credit for that, for bringing those to market, and also products like like Dynamic and Privy as well.
Yeah, it's a big difference. Since I've used Hype, like D1DX, I could use it because I'm very used to DeFi, but I couldn't just very easily onboard someone from Binance. Hype really felt different.
Right.
That was like, I showed them the interface, they can figure it out.
Yeah, I mean, with DYDX, I don't know, I guess now it's kind of history, but I don't know how much of that was that like they didn't prioritize it, or that like the tech wasn't there, or in kind of the regulatory regime of the past, they like intentionally tried to make it like more decentralized than it had to be, which also made it more clunky. So I don't know how much of it was those different factors, but nonetheless, yeah, I think we're in a good place now.
Okay, so I do really want to get into the roadmap of going forward, since your mainnet just launched this month. So can you walk us through like the timeline so far since Ligher's private beta in February, if I'm not mistaken, and since mainnet just launched, what is different, and then what do you have planned going forward after season 2?
Yeah, so the timeline is that we launched our testnet actually only a little over a year ago, right? September 24 at Token, in Singapore, and then that ran for 4 months or so, and then January 19th of this year we launched the private beta mainnet with the same 100 users who were in the testnet, and then they were given kind of, so initially deposit limits were very low, like it was like 10K, then it was 25, then it was 100 over the course of the months that followed. And yeah, they had 3 invite codes, and even those you had to earn like by actually trading. Like you couldn't just, it's not like you join and you get 3 codes right away. But anyway, so that kind of grew. By the time we did the public mainnet launch, also at Token, end of September, October 1, it organically grew from 100 users to 180,000 users. So that's like our goal, I think, was like by end of year to reach like 50,000 users. So like it was kind of exceeded even our expectations, because it's not even end of the year yet. But anyway, so what exactly is different about the public mainnet relative to private beta? One, you don't need the invite codes anymore, right? You can still use someone's invite code if you want them to earn points from, as a percentage of your points. Like you can still do that, but you don't have to. Like anyone can join. There's no deposit limit. Like if Justin Sun wants to come in and deposit $1 billion, like he can. There's no limit, right? And the fee structure is now, because we were experimenting with the fee structure before. Like now it's like out in the open. It's clear what it is. And we're also going to start publishing revenue soon. I mean, I think some people can already see it on chain. There's some websites that have that analytics. Anyway, so I guess we'll publish it in a way that's a bit more clear about which part of the revenue is coming from where and whatnot. But like, I think the total revenue numbers people kind of already see anyway, and it's, I think, like surprisingly good for some observers. But yeah, and the points, I guess, yeah. So points season 1 ended, and now we're running season 2 of the points program. Also, more transparency. Actually, I think the points drop is. I don't know when this will publish, but like when we're recording this, the points drop will happen like in an hour or two.
Yeah, on Friday, right?
Yeah, on Friday.
Yeah.
And yeah, the points program is a bit more clear now. Like before, it was completely black box. Now it's more of like a gray box for the takers, and for market makers, even almost like a white box. It's like because market makers, it's helpful for them to know exactly, because they're running quant strategies, right? Like knowing exactly how many points they'll earn is helpful when they tune their strategies. Like because like maybe if they know they're going to earn more points, they can take a bit more risk and provide a bit more liquidity than they would otherwise. And it's kind of it's harder to game that part, right? If they're like a more helpful market maker than they would have been otherwise, that's good for everybody. So the price takers, it's still a little bit of a gray box, because it's easier to like not cheat, but like it's easier to try to game the system as a taker than as a maker.
Yeah. I just checked the updated points program on the docs. Yeah, the market maker section, I think for the right audience, for the right person, that's going to be a big difference. Because before it was purely just people speculating, hey, like, is it okay if we trade a lot of volume, and do we even want to be on the other side of the liquidations? And
right.
Now, like, I can personally feel that the books are a lot thicker with market makers coming in.
And the volume, I mean, I guess we've said this before, but the points for takers are not based on volume. It's so people try to like game the system that way. I mean, I think they've mostly learned their lesson, because like if they try to do like artificial trading, then they get 0 points. Like they do leave, but yeah.
I mean, not to pry, but honestly, like I've been farming and like just trading and in general, like trying all kinds of things since June. This thing was very well run, the points program. Like I could tell, okay, weeks I was very active, I get a lot of points. And then weeks that I just kind of, even if I traded more volume, it didn't really work. And
yeah, we try to pattern match it to like real trading, right? And I guess what is real trading? I mean, that's a bit subjective, but there's like strategies that and patterns that we try to like see, if the activity fits into those. And
for people that haven't joined Ligher before, is this still a good time to join if they're trading and they're looking for a venue with a upcoming points program that a lot of people are excited about? Can they still join, and what should they even do on this platform? Do they just trade normally? And because one big pushback I get from people that are used to Hype is, this program has been running for like 7 months. It's no longer worth it for me. But I tell them, hey, like, no, this is now you don't need an invite, and now really it's week after week, it's the same thing.
Yeah, I mean, I think that if you're a real trader, right, like this is a great venue for you because it's 0 fees and you earn points. Like, yeah, are you earning as many points, as you would have if you joined in January? Like, no, but also you get a lot of other things, right? You get more liquidity. Now you can do bigger size, like you can trade more markets. Like, the system we've fixed, most of the bugs. There's trade-offs, obviously, like, but yeah, it's like it's 0 fees for retail. You earn points. I mean, I think the way you should think about it is like just trade the way you normally trade, and the points will take care of themselves. Like if you try to do artificial stuff, you're probably, like we've thought about this a lot, and we have data points from like 300,000 traders now. So like you're probably not going to find a way to like find some like way that no one's ever thought about to artificially earn points. So just trade the way you normally trade. If you're like clever enough that you can outsmart, 300,000 traders, like you should probably apply and like join our team and help us design an even better. You probably make more money that way than like trying to do it through the trading. Anyway, that's kind of a side note. But yeah, I mean, just kind of, I think we always prioritize the retail trader. And I mean, I think the points, this is season 2, like there'll be seasons in the future, right? I mean, it's not like kind of a one and done kind of thing.
Yeah, I've thought this this program it's the same points every week since February, and it's not like, if you traded earlier, your points compound. That's not a thing. And your account, if you like, I had accounts that I stopped trading on since June, and they didn't earn points. But then when I traded, since mainnet launch, it was still the same points every week based on how much I usually would have traded. but the liquidity has been better.
Right.
So technically, it's a better time to be trading if you trade a lot of sites now.
That's right. That's right. Yeah, and I gave the example of Justin Sun kind of as a funny anecdote, but whether we did spend time with him, out in Asia, but nonetheless, like there are a lot of big traders that are joining, and we hope to see more of them.
Thank you for watching this deep dive on Ligher. I will leave some resources in the description for you to get started on Ligher and start trading. It's not too late to start today. Just do your regular trading on Ligher for free point rewards. I have been using Ligher every day for the last couple months for day-to-day trading. And if you found this video helpful, use my referral link when signing up to Ligher so I can earn more points, linked down in the description. Thanks again, and I will see you on the next video.